Hello, welcome everybody for another episode of Market Watch. I'm Rano De Silva.
Hi, I'm Pasindu Pereira.
Right. So it's for the last 2 weeks, actually, what we've seen in the market, it's pretty much been a lull sentiment, or it has been pretty flat. Like we said, explained 2 weeks ago, we haven't seen big movements. So if you overall look at the market in terms of your daily average turnovers, have been at about 2.2 billion. But I must emphasize that the commercial credit transaction that was at about 10.6 billion was also captured on this. So if you take that one-off event of the calculations, you're looking at more of a 880 million average daily turnover. Again, we mentioned that there was a foreign outflow when we were speaking last week, but this now foreign flows have turned onto a positive side, but this actually comes through again the commercial credit transaction that took place with the Singaporean party buying a considerable stake in the company. So this has been the overall outlook, or I beg your pardon, the sentiment in the market has been pretty much flat. Nothing much has changed, but again the foreign interest seem to continue in terms of selected counters such as commercial credit on those one-off deals. Now, if you look at the most significant events in the global context, we see the US rate hike. That has been the first time over a year, I would say, passing to it again, the US has increased their rates. So this, in terms of a global context, if you look at the commodity market, to the metal market, you're looking at gold has also dropped, and if you look at oil has also seen a considerable drop again. So these were the signs that have been taking place in the market, global market sense. And if you look at the impact onto the equity markets on the emerging market side, we've seen pretty much of a drop even in Hong Kong, in Shanghai and Sydney. All have seen marginal drops, but they're quite 0.3 to 0.9, 0.8% drops in the markets if you look at an emerging market scale as well. So Pasinu, in your opinion, with the impact of the rate hike, and also I think Yellen has the central bank governor, the federal governor has said that she expects that rates will further increase. So in your perspective, how do you see this affecting the emerging markets per se?
Yeah, I think, Radu, it has almost been factored in terms of the capital outflows from emerging market. But if you look at the last 6 to 7 years after the US crisis, where we have seen a huge influx of capital from Europe and US investors to high-yielding emerging market stocks and bonds. The US and Europe rates were at a record low level, so investors were seeking some high-yielding products in emerging markets. So that has been one of the key drivers in the emerging market growth as well. But now with the higher interest rates in US, we have seen a sort of a reversal from in terms of the capital from the emerging markets back into US, right? So that will put a pressure on the emerging market, I would say the growth prospects and the capital outflows, and further the currencies as well. So that will put a brake on the economic growth as well. So that is what we have seen over the last one and a half years. We have seen China, India, Malaysia, South Africa, Brazil, right, and Thailand. So these kind of countries are having a sort of a pressure on the growth outlook in these countries. So if you look at further, some of the countries which has high foreign debt to GDP ratio are having a sort of vulnerable time in terms of the debt servicing cost. If you look at the, now Rano, your LIBORs are going up, right?
Exactly, Pastor. I mean, I was seeing also that there is definitely going to be a pressure in terms of sovereign ratings for these countries. I see there might be a bit of a significant impact in sort of the sovereign impact as well in terms of the pricing, in terms of the debt raising factors
absolutely.
there.
If you look at the borrowing cost may go up, your refinancing cost may go up, and because your debt servicing cost may go up in two ways. Number one, your LIBORs are going up, as I said earlier, and again the currency depreciation may become your foreign debt more expensive. I think that particular impact will be in the companies or other emerging markets. So
Definitely, Pastor. I'm also noticing, countries with heavily exposed to, foreign debt, they'll definitely have a bit of an impact. There might be chances that they might be downgraded, etc. I'm noticing that as well. I think, rightly to talk about Sri Lanka coming down to a more of a local front. Our country's debt to GDP in terms of foreign debt to GDP, we are looking at about 38%. So, I mean, like you rightly said, LIBOR going up definitely is a factor. Again, our servicing cost is going to go up. And again, if you look at the current 12 months ahead of us, we are seeing about 4.6 billion almost to be paid. I think, that is just the capital payments and etc. And then we'll notice that our servicing costs are definitely going to have an impact as well. I think the domestic borrowing levels are definitely going to get affected through this. I think I believe in terms of the policymakers might resort to raising locally, so we might see more PSNCR going up. So rather public sector net cash requirement.
Again,
also
I think that will put a pressure on the local interest rate scenario as well. So if you look at Ranu, the overall economic sentiment probably within 2017, I would say the more pressure on the currency that is persisted, and again the currency or rather the interest rate may have a bad impact or rather pressure to go up. So those things may definitely persisted in the economic front. Again, from the policy rate point of view, I expect some kind of a we'll say 75 basis point to 100 basis point increase probably during 2017, and further the current tightening monetary policy will be continuing, so putting the pressure on the growth outlook as well. So that has been really pressured at the moment. So I expect that sort of a pressured growth outlook may continuing in the 2017 as well.
And just to mention again, you're looking at your interest rates going up about, let's say, 100 to 150 basis points. Is it a good assumption possibly to expect? I mean, in your opinion, where
actually I agree with you, because if you look at a 100 basis point increase in the policy rate front, so market interest may probably be increased by that particular amount. So,
so that means 1% to 1.5% is
probably yes.
We could see.
Probably yes.
Okay.
Yes.
So, however, a couple of other factors I think we also must mention would be the supporting factors. I think not everything looks so dark and gloomy. I think there's a silver lining somewhere, or the light at the end of the tunnel. You're noticing this the Chinese-backed projects. Especially the Port City project is a 1.4 billion project. So I think that's going to create jobs at about, I think 85,000 jobs are going to be created. So this is going to actually add on to our GDP, and that'll have a positive effect as well, job creation, etc. And also we see that EU has agreed to go with GSP plus again, so that will be in 2017. So again, the export market, specifically I think the apparel industry is also going to benefit through this as well.
As you said, those two factors may definitely drive the sentiment in the market amidst this kind of a gloomy outlook from the from the economic front, I would say.
Yeah, so I mean, in terms of our sectors as well, can we still maintain the fact that we are still looking at the manufacturing base as well as the we are looking at the construction related manufacturing and the construction that personally I feel they are the counters to be looking at coming on to the new year as well.
Yeah, if you look at the growth prospects of the country, Ranu, I think there's a fundamental story behind the Sri Lankan economy, right? So a lot more space for us to play, right? But the only problem is this ongoing, I would say, the bad economic outlook in the global front. I think that has really hurt the local economy as well. But of course, if you look at the local front, more space for us to grow, I would say. So with the structural changes which we are expecting from the economic front, as you said, yes, construction sector and more of manufacturing, especially for the export focus, manufacturing would play a key role in the growing sector's point of view.
Right. So it seems like nothing much has changed. So in taking all your comments also into consideration, I mean, we look at the Colombo bars. the whole, companies with maybe foreign debt, overall in terms of debt servicing costs, we might see a uprise in that, and it might be a bit of a lull, kind of a sentiment in the market. But I think, even within a period today that we're looking at in terms of the market, where low PE multiples, very attractive market. So I think this might continue to be a little bit lull just because of the uncertainties continuing in the market. But I think, for a portfolio builder, I personally think it's a very, very good time to maybe get onto the market and start buying in. It's ideal time, not waiting for things to go up.
Ranu, your long-term horizon should definitely be there. Your time horizon should be long-term, right? So with that perspective, I would say yes, at this particular attractive multiples, you can collect, or rather you can enter into the equity markets, collect in a gradual basis. But having said that, we don't want to forget there would be a sort of a painful period ahead with these global outlook and the local economic fundamentals. So
Lafzi Bosit, you got to round up by saying be wary, but it's a good time to build portfolios.
Yeah,
Is that
correct,
so? Right on, everybody. Thank you very much for tuning in, and thank you very much, Pasidhu, as well. All of you have a very good day, and we hope to see you soon. Bye-bye.